What stock have short sellers lost the most money shorting? Tesla. I want to start today's video off with Tesla. Is this whole thing lasting? Is it being prolonged? Because short sellers are making money on Tesla's sell-off over the past 10 trading days. From December 15th of 2023 to the 19th of December, you saw short interest rise on Tesla over 4 million shares. In yesterday's video, I showed you that I doubled my position once again in Tesla calls and I'm absolutely bleeding. Just to disclose, no, I am not exiting those because a lot of you guys have been wondering, Donnie Stock's exiting his position. No, I am not. Now I want to take a look. January of 2023, Nvidia, Apple, Microsoft, Google, the blue chip stocks did something like this. Now, of course, Nvidia is an outlier. Nvidia went absolutely insane, but something like this, right? Absolutely crushed the entire market. The Magnificent Seven holding up the overall market, or the Magnificent Six, right? Because Tesla has not done that. From back in January, Tesla had a nice little scale higher, but it has not finished that second sort of bull rally that Nvidia and the other blue chip stocks have had. Now, what we're tracking with Tesla, trading at 221.37, down 2.57% on the day, broke out of the parallel channel to the downside, which scares me. I'm not going to lie, I told you once it breaks below this channel, it will get scary. If it lasts more than a day, I will be even more scared. I think very worst case scenario, Tesla comes down to 205.60. I don't think that will happen. I hope that it holds this trend line that it is holding right now. We did not touch any sort of technicals. We just left them the same. I want to see Tesla break right back into this channel. Now, the next upcoming catalyst that we are going to be focusing on is Tesla earnings. It comes out January 24th, so pay attention to that. Lately, EV makers have not done so well, right? Lucid, Hertz. Does that mean that is going to correlate to Tesla? Maybe. Maybe Tesla is going to get hit. Maybe that doesn't matter. And the reason that doesn't matter is because Tesla may not be outperforming like crazy, but it is still, in my opinion, the best, right? They are the best. Now, taking a look at the previous cycle, we broke below this channel for a single day. It was not even a full day. It was a wick down. So if this was going to play out the same, you would see Tesla close back above this channel by the end of day, which would be absolutely insane, closing back above 227.75, 227.80, which means Tesla would have to flash higher for the end of day and then get a candle close. Is that going to happen? Maybe, maybe not. But overall, I am still in Tesla. I'm watching it to come back in this channel, and I am still bullish for the first and second quarter of 2024 at least. Now, AMC. Let's get into it. Trading at $4.64, down 1.28% on the day. And guys, I haven't asked you yet, please hit the like button, it helps me out, and also make sure you're subscribed to the channel. AMC has not come down and dipped its toes into where I think it is going to, so expect slightly more downside before that squeeze higher. Trading at $4.64, I said $4.35 to dip its toes in, and then you may get a flash down to $3.65 being the very bottom to test this long-term trend line. If you haven't been keeping up with this channel, this trend line has over 10 touch points coming all the way into the IPO of the stock. So overall, watching $4.35, and then it flashed to $3.65. And as many of you know, Ethereum Classic tracks AMC, vice versa, as well as XRP. Ethereum Classic has been up over 40%. Hitting this box of resistance, which we saw in the last run-up, so this is completely normal. I'm watching for another leg up over here as well. And as crypto feels the pain across the board, Ethereum Classic is just getting held up, but we do want to see it hold that level so AMC can eventually follow. Now also, some institutions also are purchasing AMC, but they were purchasing at high prices, which doesn't make any sense. Again, take this with a grain of salt. But previously, way back, you saw that literally in the 13F filings, Bank of America, Bank of Montreal, and other banks were purchasing AMC at over $4,000 a share, which is very odd. Now, AMC has 2.8 million shares available to borrow, closing the week, 1,000 calls compared to 19,000 puts expiring in the money. So we are getting a little gamma ramp to the downside, and then 82,000 calls expiring out of the money. We are watching the options chain for next week. I don't want them to delay this any longer. I really want to see the flash down so that we can start to scale higher with next week because we have so many options. Contracts being bet on AMC as well as GameStop. Short exempts died down a little bit, but I wouldn't be surprised if they went back up to 300,000 for today and Monday. Now GameStop is winding down their NFT marketplace, which is effective February 2024. GameStop is trading at $15.25, completely flat on the day, no percent up, no percent down. Again, we have a bull bear case scenario drawn out, and GameStop has not made a move one way or the other. Volume is very exhausted. We're waiting for a break higher out of this macro trend line, $18.35, or we want to see a hold anywhere in this box between $14.60 and $13.50. Okay. So watch those levels for a hold for GameStop, and for GameStop to come down, test the previous demand zone, and then make a push higher. If we get into this zone, I expect volume to pick up and a move higher for GameStop. GameStop, 90,000 shares available to borrow on it. No calls compared to 5,000 puts. So we are bad on the option chain as well. And then next week, again, over 400,000 call contracts being bet. We want that to scale higher starting the week next week. We don't want them to delay it next week. Now, many banks reported earnings today, and I want to talk about a specific one that gave AMC a bad price target of $4.75, which we have come down and we have hit, but we know that the price is manipulated. Citigroup now plans to cut 20,000 jobs as it reports the worst quarter in 15 years, which is absolutely insane. Now, Citigroup Inc.'s head of local markets, foreign exchange trading for Europe, the Middle East, and Africa is the latest in the slew of senior executives that have exited the bank in recent months as part of the Wall Street Giants overhaul under Chief Executive Officer Jane Fraser. After 30 years with the bank, I'm just going to say B will be leaving as part of the firm's sweeping and restructuring. Bloomberg goes on to tell us with the revamp, Citigroup eliminated the 3 regional chiefs who oversaw operations in about 160 countries and around the world, and the company has said it will record $780 million in restructuring charges for the 4th quarter. You guys let me know what you think about this in the comments down below, but we are not done. Morgan Stanley is close to an agreement to pay $200 million to $300 million to resolve an investigation into its employees handling the stock sales big enough to move the stock market, but there will not be any criminal charges against the bank. What's new, right? Finally, between Q1 and Q3 of 2023, more than 4,600 FDIC insured financial institutions reported. Total assets decreased by $310 billion, total deposits decreased by $344 billion, and net charge-offs increased by $30 billion. A net charge-off, aka NCO, is the dollar amount representing the difference between gross charge-offs and any subsequent recoveries of delinquent debt. No charge-offs refer to the debt owed to a company that is unlikely to be recovered by that company. Moving on, guys, if you haven't yet, the top of the description or pinned in the top of comments, get 15 free stocks, each valued up to $2,000 per stock, as well as earn 5.1% APY on your uninvested cash for doing absolutely nothing. All you have to do, use my link, open an account with Moomoo, a great stock trading platform, and make a deposit. You can literally deposit $1 to start earning benefits, and if you've done it already, tell your friends to come over to the channel, use the link, and do it as well. Once you make a deposit, you will start earning all of the benefits. So for anyone who signed up, make sure you make a deposit. Also, guys, get in the Discord. The link is right under the video. I'm in there on the daily. I post my positions as soon as I take them. We talk stocks all day long. We post gains, post losses, and we have options trading alerts in there by bar pot, and it's only $3 a month. So this is the place to go. Whether you're a beginner or advanced trader, this is the spot to go. And I don't know why my cat is literally digging in my drawer. Doesn't make any sense, but let's move on. Both of those links are in the top of the description or pinned in the top of comments where you can find them. December PPI inflation rises to 1% below expectations of 1.3. Core PPI fell to 1.8 below expectations of 1.9. So both CPI and PPI inflation are back on the rise, but PPI came in below expectations. The Fed's job is not done yet, but the markets are now expecting a rate cut every meeting officially in 2024. Beginning in March, that's right, 7 straight interest rate cuts this year to bring the Fed funds rate down to 3.5 to 3.75 in December. Meanwhile, the Fed's latest guidance, again, says only 3. Touching on the S&P 500, 476.67 tested this zone at 477.75, and we tested it for a second day, tried to break over, but this is just a hard resistance level for the SPY. Once we get volume to pick up, hopefully on today, close more green if possible above that level. Overall, it looks like either tomorrow or we come back down and retest and build more momentum to come up to 480. I'd watch for volume to break higher and a push up to 480. Overall, the SPY is not looking too bad. I'm not mad at what the SPY is doing. We just don't want to see a nasty double top here and a push back down. If we do push back down, I'm watching this zone anywhere from 460 to 455 for the SPY to come and bounce back higher. If we break even lower, then it's not going to look good for the SPY. The last thing I would watch is the macro trend line from the previous year's sell-off for a hold on the SPY, and then below that, we're likely to go into a worse sort of market correction or crash. Again, unlikely scenario. Now, ARK Invest, Kathy Wood says base case for Bitcoin is $600,000, and the bull case is 1.5 million by 2030. So she's saying at least 600K by 2030, but if there's a bull cycle, if it's a bull cycle, bull case, and Bitcoin is extremely bullish, at least 1.5 million, which means that's good for us Bitcoin holders. Now, the market is not doing too hot. It retested its highs and got smacked, as well as Bitcoin. Everything is having trouble. Everything is having resistance. We just need a lump sum of money to go back into the market. And for that to happen, many things are showing that a sign of weakness may have to come first. We may have to see some sort of sell-off in the overall market and in the overall crypto space for people to collect themselves, collect money, and then pump this thing back higher. Now, previously, the Bitcoin news was the ETFs, yet Merrill Lynch, owned by Bank of America, is reportedly not allowing customers to buy spot Bitcoin ETFs. But why? It doesn't make any sense. Moving on, you see that Vanguard also refuses to let customers buy ETFs with their own money, and customers are ending up closing their accounts. So you can clearly see that something fishy is happening with the ETFs. And even sketchier, BlackRock CEO says that the next step will be tokenization of financial assets, which is a horrible, horrible thing. I don't know why the SEC is letting these institutions do whatever they want. This is going to ruin the system worse than it already is. Finally, to close out the video, German house prices are in a free fall. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to check the links, join the Discord, get your free stocks. I love you all. Lottery Stocks out.